can individuals or businesses who recently filed their 2016 tax returns and found an error or errors go back and amend their tax return? And what's the penalty for amended tax returns?
The golden rule here related to amended tax returns is you should be filing an amended tax return anytime you need to correct something from the original filing that was wrong. And there's no penalty related to doing that. And you also should not wait until the IRS catches it. This is something that you want to be proactive about. And the process is you file a form, 1040X. It's also important to note that 1040X is not something you can e-file. So when you're going to file an amended tax return, you have to do it the old-fashioned way in doing a paper filing. Now, the other thing, the tax preparer cannot force you to file an amended tax return. They have an obligation to advise you if they're aware of something on the tax return that is incorrect for whatever the reason. But ultimately, the decision to file the amended tax return is up to the taxpayer themselves. And as far as time limit on when you could file an amended tax return, it's the later of 3 years from the original date of filing or within 2 years of the date you paid the tax. And once you do that, it's about an 8 to 12-week period for the IRS to process that amended return. So whether you are going to get a larger refund or whether you're going to owe additional tax, if there's something wrong on the return, you should be filing an amended return. And the good news is that there's no penalty related to, quote-unquote, coming clean.
So will amended returns face more scrutiny than other returns filed? Will the IRS say, hey, you made one mistake, maybe your whole return is filled with mistakes?
That's the logic that many taxpayers have, and as a result, they are afraid to amend their tax return when they find something that's incorrect. Again, whether they're getting a refund or an additional payment, they're most concerned about the fact that they could be audited, and no one wants to be audited by the IRS. So I'm going to give you the answer straight up. And the answer is filing an amended tax return is not specifically going to create your return to be selected for auditing. So if it was a situation where filing an amended tax return, King, would trigger an IRS audit, nobody would file. So the audit selection process is the same for when a tax return is originally filed or whether it's an amended tax return. There's no difference. And again, it doesn't matter if it's an additional refund or a payment. It's not going to trigger an IRS audit that you otherwise would not have had. And believe it or not, the IRS does value honesty. And the other side of this is correcting an error on a tax return could actually offset or head off, I should say, an audit in the future, because the IRS uses a scoring system in selecting tax returns for audits, and that scoring system, and the higher the score, the worse it is for you as far as being selected for audit. It's based upon history of audits they've done, and it's based upon comparisons of similar tax returns to yours. So with all that said, if something is wrong on your tax return, you should file an amended tax return.